Hi, I'm Keith Schaefer. Today I'm going to tell you the hottest stock in my subscriber portfolio. It's a stock that's only trading at 3 times cash flow and I think has a great future ahead of it. And I'm going to give you the name and the trading symbol completely for free, no hitches. And the reason I'm going to do that is because my subscribers and I have made a fantastic amount of money on this stock already, and yet I still think it has amazing things ahead for it. I'm going to explain to you why that is. So the name and the trading symbol of the company is Pacific Ethanol, symbol PEIX on the NASDAQ. Now, I wouldn't blame you if a lot of you just turned this video off right away because nobody likes ethanol. Investors don't like ethanol, big oil doesn't like ethanol, everyone thinks that it's really bad and it's subsidized, but the truth is it's incredibly profitable right now and should stay incredibly profitable for about another 2 years, I believe, and the stocks are just not reflecting that. And Pacific Ethanol is in a very unique position because they are the biggest supplier of ethanol on the West Coast, where there right now is a huge premium to the Midwest and the rest of the country. Ethanol, it's early March when I'm recording this, is trading around $2.25, $2.30 in most of the United States. But on the West Coast, it's $3.28 a gallon, a full dollar more. And that means Pacific Ethanol is just raking in the cash flow right now. And the good news is as well, there's only 16 million shares out on the company. So when you talk about a company that's producing 160 million gallons a year, and it's soon going to be 200 million gallons a year when a new plant of theirs opens on the West Coast, or sorry, in California, you're going to see a huge increase in cash flow this year. And that's going to mean two things. The stock is going to start to reflect all the increased cash flows, and it already has, but it's also going to get the added whammy of multiple expansion. And even right here at $15 a share, I say the company's only trading at 3 times cash flow. I think it'll, actually it's even trading less than that because I think it will earn $5 a share this year. So the reason for this is ethanol is just gasoline that's made from corn as opposed to crude oil. And right now, corn is trading very low right now, and ethanol is trading very high. So that spread makes for a huge profit margin for ethanol producers. But nobody is making money like Pacific Ethanol. And there's a couple reasons for that. As I said, there is a premium for ethanol on the West Coast. Now, right now it's over $1 a gallon, and that could come down this year simply as more rail cars become available and the weather warms up. At the same time, ethanol exports out of the United States right now are climbing dramatically. And China is one of the main new customers for the United States, and obviously the West Coast ethanol is one of the biggest beneficiaries of that. But the other thing that's happening for ethanol in particular is that demand is really picking up. No matter how much, because we're exporting so much, inventory levels are dropping. So the fundamentals are going to look way better for longer than we ever thought only 3 or 4 months ago. Now, there's another reason Pacific Ethanol is trading so low. Just over a year ago, the stock had a 15-for-1 rollback because its operating subsidiary went bankrupt and they had to recapitalize the company. So I know that will scare a lot of investors, but that was then and this is now. What happened in 2012 was there was a huge drought and corn prices soared as the corn crop declined dramatically. And 2013 was a completely opposite year. So in 2012, when corn crop collapsed, corn prices soared and ethanol profitability collapsed. In 2013, it was the opposite. The crop yield was one of the best in American history, corn prices plunged, and ethanol profits started to go up. And Pacific Ethanol, as the junior in the group, and as the one that had the most checkered history, was the last one to start to get some legs. But once it did, it really caught fire. Subscribers and I bought the stock in November 2013 at just over $3 a share, just after they had announced a horrible third quarter for 2012. But that was the turning point. And since then, margins have just got better and better and better. And now we're seeing, as I said, margins of over $1 a gallon some days for Pacific Ethanol. And the stock has moved now from $3 to $15 in just 3 months. And it's still trading at 3 times cash flow or less. So very excited about the potential for the stock. The market is slowly coming around, and this huge rise is signaling that the market is rewarding the stock for its fundamental improvement in cash flow, but there's still been no multiple expansion. And so when you consider that its peers like Green Plains Renewable Energy trades at 8 to 10 times cash flow, there is lots of room for this stock to perform should margins keep going the way they are. So in all fairness, really there was a couple things that impressed me about this stock. One is that I helped promote this stock to subscribers like you for the last 3-4 months and nobody bought. My subscribers made a lot of money, but I think just the whole idea of ethanol scared people away and nobody bought my service based on my teases on this stock. So that was a good sign that the mainstream had not yet caught on to it. And then the other thing that's happening right now is because the margins are so great, I'm expecting some sell-side coverage. We're seeing greatly increased volumes in the stock, and the stock continues to go up even at $15. So over the next year, ethanol prices and ethanol margins should stay very strong right now for a couple reasons. There's so much corn out there from 2013 that this year, 2014, would have to have dramatic reduction in corn crop for the prices to go up so much that these stocks would get hurt. And I don't think that's going to happen. Really what we're seeing now is the beginning actually of a global cooling period as measured by sunspots. So the crop yields for this year and next year should be absolutely fantastic when you look at the 11-year cycle of sunspots and global cooling. So I think the stocks here and the whole industry are going to have a great run. And so now that I've told you about this stock, you can go out and buy it, or you can just watch it and do whatever you like. And I'd love to tell you that these are the types of stocks we find all the time. They're not. The reality is that this type of stock only comes along probably once every 3 years. Our last big win that was this fast, this quick, was Excite Energy in 2010-2011 when it went from 60 cents to $6 a share. In the meantime, we hit singles, and we hit a lot of them. Sometimes we get lucky with doubles and triples, but we're just hitting singles, looking for the right place to be in the market, and then every once in a while, this type of stock comes along. If you'd like to find out about these types of stocks before the mainstream, I'd urge you to sign up to my portfolio. It's a great way to trial the service. We offer monthly or quarterly packages, and in the next few months, hopefully we find another one just like Pacific Ethanol. You can click here to give my service a try.